Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this is for Wednesday, the 16th of August, 2017, just after 4 p.m. Central Daylight Time. So the stock market up, gold and metals up, but the gold really traded $6 higher than this right into the close today. You were down about a penny and a quarter, 1.25 points in the S&P, about there in the Dow. NASDAQ maybe up 8. So I'm just giving you an idea how the market's finished up. Very close to this in the energies, and what the energies aren't liking is as much as they're seeing draws in the crude oil, what's happened is you're not getting those draws in the gasoline and distillates. That's not bullish for these markets. And now the question is, because of that, will the refineries start tailoring back the amount of refinery capacity? They're at 96% now. Will they wean back on that a little bit? And that could cause those stocks to again start building, if you will. But for the meantime, we are seeing those parts come off. And if you watch what's going on in the price of crude, and I wrote this today in my report for my subscribers, I showed that we're still, if you will, in the contango situation, but we're moving to the backwardization where the front month starts becoming worth more than the back, and then it makes no sense for producers to store as much oil. They'll start moving the oil to the market. It's also a sign that we're stabilizing and getting the market in balance. Got hay fever, so excuse me. All right, so let's take a look at the event that moved the day, and that's the highlight of the Federal Reserve minutes. Low inflation, that's splitting the Fed over the future interest rate path. Some members say move, others are saying no. They are saying that it's the idiosyncratic factors. You know, they come up with these words, transitory, idiosyncratic. Come on. Why can't they speak English? They can't figure out what's going on. Officials were split as to whether inflation expectations are well anchored. Well, I can understand that because you get a good month or two and then you lose it. That inflation may linger now below the Fed's 2% goal for longer. It could be tilted to the downside. These are new words. So in essence, here's the one thing I think that you have to take away. They agreed that it's appropriate, even with all this, to signal that the balance sheet readjustment, which is grammar for they're not going to keep reinvesting funds that are coming due. They're going to shrink the balance sheet, and that's going to happen soon. Could happen at this coming meeting. Second quarter GDP growth set up to a solid pace, and fiscal policy. How's this? Lack of fiscal policy from the Trump administration might be the better word, is weighing on firms' investments and hiring plans. We've seen that, and that's what we've got. The business council disbanded. You know, President Trump just can't keep away from his own problems, and now that problem has become one where the whole thing is just blown up. So forget seeing all these executives. They began running after the Charlottesville situation. But meeting once a month, more for photo shoot 1 hour at a time, what was the point of the meeting anyways? So when we come to the NASDAQ, here we are with a market that's come back up. It is not closed back over 5938.50. On a weekly area of closes, still pointing to the upside. Now, when we come to a daily area chart of closes, this is the daily, we're right at a key number. Does the market get up and over this, or does it turn back down from here? I think we're at that point where the market has to make that decision. And this rally has come back just as I was telling you. This big breakdown, it was like this big rally up. They failed. And you're just staying more or less in this pattern right now, the sideways action. Throughout that spike high, this break low right here, and you see that. When we come over to the swing line, you still have a pattern of a higher high, a lower low. That is not a trend. The market got up yesterday to the 18-day average. The day before, that it got to the 18-day average, and today it hit it again. So my idea that the market is fighting a battle right there, I think, is right on the money. Should you take out the lows of today and get under that 18-day average of closes and settle there, believe it or not, new sell signal would kick into the market. When we take a look at Bollinger Bands, the market is again developing straight lines, if you will, 58, let's call that 58.30 and 59.76. Back and forth, just right here, if you will. Those are your support and resistance points. The momentum of the chart is what? Up. You see that on the slow stochastic. The bias is up, but you are not trending, and that's the problem. In the S&P, stuck for 3 days at that 18-day average, stuck between the high and low Bollinger Band. When you hit the upper band, you went to the 18-day average. You hit the lower band, you came back to it. You see that? Momentum up here, bias up, and no trend again. When we come to the Dow, this has been the strongest of everything. Today's rally high got the market up to, what was it, 22,067. So while I have this number there, if you take a look, it's higher than that. This arrow should be now pointing up. I'll fix that for you tomorrow, but it's important to see it. And sometimes you got to really look to see what's going on the chart. Momentum, however, is what? Flat, not going anywhere. And this is going to give you a pattern of a lower low and a higher high. Remember, I'm going to take this arrow and have it pointing up. You're not trending anymore. In the Russell, you are downtrending. You have a market that's got lower highs, lower lows. The 100-day average in green yesterday was the resistance point, and that's because the market hit the lower band, and the closest of the averages was here, and you are oversold and staying there. It's the flip-flop of the other indices. Then we get to the VIX, and I feel really good. When the market was going up here, I had told you, if I'm right, and I said this on a number of TV shows, this whole rally, and it's just going to come back and go to the closest of the main moving averages. Today, it hit the 100-day average. That's 1125, and you hit that number. So bingo, that's exactly what occurred. If it drops further, the 18-day is the next target with it. Momentum is now pointing down. Now, you're not in a downtrend yet because you didn't close under the 18-day average of closes. That could happen on a break tomorrow if you get one, obviously. When we come to the bonds, if you look at the break that you've had, you took out that low. So you got a higher high and a lower low. No trend. Overbought. Bias up. Today's Fed notes, the minutes, if you will, really threw the market for a loop. I don't think anyone was expecting them. This disjointed might be the right word. I read those notes and I'm going, whoa. I thought they'd be more on the same page, and they're not on the same page. That's what I walked away with, at least. When I look at the September 10-year notes, higher lows, higher highs, bullish. Upside bias, bullish. Market fighting its battle at the 18-day average for direction. Makes sense after hitting an upper Bollinger Band, but you remain overbought, a difficult trend. When you get to the dollar index, you rallied up yesterday to the 18-day average and today. If you take a look, 94.05.5 is today's high, 94.04.5 is the upper Bollinger Band, and falling, well, we haven't quite hit the 18-day average, but don't be surprised if you do. What happened in a nutshell is, because now we're talking, well, not me, but because the Fed is talking of not necessarily all being on the same page to raise interest rates, that takes something of a bit away here. While we know that Mario Draghi came out today in a Reuters article, apparently on an interview somehow from somebody, and the statement was he is not at Jackson Hole going to announce new monetary policy, it doesn't mean that the European currency isn't thinking or of raising rates down the road. He's just not going to announce it at that meeting. And what happened? The market comes down, back up today, and stuck at the 18-day average. Again, no trend in this market, just sort of stuck right here waiting for an event to decide what to do from. In the Aussie dollar, after hitting the lower Bollinger Band, finally you had one stab at it, and today back up to the 18-day average. Market is now correcting an oversold condition, but no trend. How often am I saying this? No trend at this point in time. Japanese yen, no trend. The market's got a higher high, and with the break you now have under this low, a lower low. You went down. Yesterday, if we take a look, we didn't hit the 100-day average, but momentum had turned down. Today, you went to that number, came back, and settled right here. And again, I think it's a sway of events against the dollar, not so much for the yen, but against the dollar with all this news that came out. Now, in the crude, you went down to 46.67. 46.65 is the lower Bollinger Band in an oversold market. I will not be surprised at all to see some support try to come in the market. There's nothing bullish on the chart other than it's oversold. You're in a downtrend. You still don't have the 18-day average under the 100, but this market has again turned its bias to the downside. The same is true with the gasoline market in a downtrend. Finding early support yesterday and today at the 100-day average. If this gives ground, look for 154.04, the lower Bollinger Band, and that momentum still pointing down but oversold. And in the nat gas, that whole rally ran out of steam, and now you're back to the 18-day average trying to figure out what to do next. This is a non-trending market. You have a lower low, a higher high. I really thought that the market shouldn't have got over this 18-day average. It did. Scooted by 12 cents and then right back down. A heck of a knockout, if you will, on the trade, but nobody's grabbing a trend in this market, and that's the problem. In fact, that's the problem facing a lot of the markets right now, and I talk about that and teach you what a trend is in my charting course, and it's a video charting course. If you can sit in front of a video, if you got a computer in front of you, which in order to watch the video, that's what you're going to have, we give you charting software, you see what I do in a video, you do the same thing. Over and over, and then in the mornings you look at my daily recorded morning subscriber video, and I hone in and I start reinforcing what slow stochastics are doing, what swing lines are doing, what the Bollinger Bands are doing. I explain the concepts, I teach how to work with them, and then I walk you in the window envelopes. That, by the way, is a profit-taking tool, and I show you how it all fits in. So if you can see what I do, you do the same thing. You follow the numbers that I'm going to give you, and you learn how to do a lot of these yourself, of course. You read my commentaries, and you watch the videos during the day. They're going to be the live video for you. Well, they're live the moment I shoot it in the mornings. Well, it reinforces things. I forgot to raise the price of the course when I said I would last month. I'll give to the end of this week. My staff here knows we've already talked about the new price. We've set it, and it's going to go up come Monday morning. So if you want to take advantage before I raise the price, do so. The whole course is $99.95. It's about 6 hours of videos. Then you get the charting software, $100 value. You're also going to get from us my research for 30 days. That's a $60 value for 30 days. That's included in the $99.95. Again, I think you'll find this worth your time and effort. You'll get through this course in no time at all, and you'll have a game plan that you can build on from there. At least you'll see what my thoughts are on the market. And again, I'm going to repeat that. Trading is about game plans. It's not about firing off the seat of your pants. It's more a game plan. You're going to lose. It's a guarantee. You're going to have losing trades. You're going to learn to control them. You're going to have winning trades. That's also another part that's going to happen. Can you let them run? Well, that's what we're going to try to let you learn in this course. Call us. Go to our website, www.iraepstein.com. You'll see a carousel of free offers on our website, or the best thing to do if you go to our website is you'll see under the word education, go there, and everything about the course is there, including some short videos that explain how I teach. You can click up here at any time if you're watching me on YouTube. That icon will take you right to the course as well. I'm Ira Epstein. Have a great day, and I'll see you all tomorrow.